What's going on to the AMC stock family? In today's video, we have to talk about the correlation that we've been discussing quite a bit on this channel. And so just take a look at this AMC stock family. I'm not sure if many of you guys know, but Tesla and also some other insanely high amount of blue chip stocks, they are having a lot of downfall on a day like today. And it really makes you wonder what is going on? Because we see the winner really today, which was AMC. AMC has all these green candlesticks, and while they may not be demonstrative of the most demand, because we do have some wicks on the candle, they are not down like Tesla, and they are most certainly not down like Apple either. If we pull up the Apple chart right over here, it is certainly not as bad as this. And so why might this be? Well, in the AMC stock family, it is called the correlation. And in this case, it is the inverse correlation. Because on the S&P 500, let's take a look at this index. Many people have been pointing out to an inverse correlation between AMC and the S&P 500 or the general market or just regular equities and not these meme crazy stocks. Even though at this point, I don't think AMC is that much of a meme stock. The fundamentals get better and better on a day by day basis, but regardless, it is generalized as a meme stock. So that's just what I'm going to call it for right now. But regardless, we do see that the S&P 500, what is going on with this massive red candle over here? This is not normal, nor is it typical. And these are the type of moves that freak out the general market, and they consider this crashes to some extent. Not all people do, but some most certainly do. And so that also brings me to the next point. How are you going to define a market crash? Because we've also been saying that AMC usually decides to go up and will probably have a high likelihood of going up when the market crashes. And so how would you define a market crash? Are you going to define it as a 5% drop? Are you going to define it as a 3% drop? Or are you going to go with the general consensus and say that it is at least a 10% drop? Because that is what it is usually defined as, right? At least a 10% drop in the overall market, which can be illustrated throughout the S&P 500, which is in other words ticker symbol SPY. And so if we go all the way back to AMC, the chart, then we can understand that the last time that the NASDAQ actually had a correction, which was at least a 10% drop, that was a time when AMC actually went up in share price. And so AMC went up in share price right around February timeframe, so that was around $17. But you have to understand that this also was when AMC recently was at $2 a share. So from $2 to $17 a share, I don't think that is bad whatsoever. But this was also the time when a lot of other equities, like Tesla and like Apple, they were below many of their moving averages. I remember Tesla was continuously at $585 a share, even $600 a share just regularly, nowhere near going above $600 a share. But yet again, we do see that happening again for Tesla and Apple and even some more blue chip stocks. However, AMC is not doing that. Now let's ask some questions. Why is that going on right now? First of all, it can most certainly be about the inverse correlation we were just mentioning. This inverse correlation, again, one more time, when the general market decides to go down in share price, that's when AMC decides to go up in share price. This is not 100% guaranteed all the time. However, this just is one of the patterns that we've been noticing. And so on a day like today, that pattern really was demonstrated. Now, enough of the charts. We've talked about the inverse correlation quite a bit, but I just would like to have a quick side note for the AMC mother of all short squeezes, or just for another short squeeze 2.0. I would like to see the stock go above this wick. Now, I also mentioned how, yes, we did not have the best candle on the day, but it was, again, most certainly better than the Tesla and Apple candlestick on the day today. But nonetheless, we do have this candle wick right here, and this is not a candlestick. A candle wick and a candlestick are very much different. And so with this candle wick, that indicates that there just wasn't enough demand, there was not enough volume. Even though the volume has been pretty constant in its ability to be green rather than red, we still need that full-on candlestick. And that candle needs to be above $51.80 a share. That's a number that I'm going to be eyeing for next week for AMC, because many people, they are already starting to line up all the call options again, and not all call options. That doesn't necessarily mean that the stock is just going to go up. That just means that there is a lot of conviction going on, and that really indicates the general sentiment. How are people feeling about AMC? Well, with the call options lining up, and with this very near to be close breakout of this major resistance level, it just seems like AMC is finally starting to get ready for that next short squeeze 2.0, and everything that we've been talking about will start coming into fruition. I know that was quite a bit about the inverse correlation between the S&P 500, in other words, the general market and AMC, but again, on a day like today, it was really illustrated, so I just had to let you guys know. Now let's talk about how there is even more pressure going on right now with a lot of these blue chip stocks, which again, really indicate that, wait a minute, if there is some sort of a stock crash, which again, some people may justify and define a stock crash as various different numbers. One person may say it's a 3% drop, whereas another person may say that it's a 10% drop, etc., etc. Whatever your definition of a stock crash is, based on this inverse correlation that we've been talking about, AMC should go up in share price. And so if more pressure is being added on to stocks like Tesla, which does make up a good amount of the S&P 500, and Cathie Wood is selling more than $100 million of Tesla stock despite saying it will rise over 300%. This will, in the temporary near term, cause even more pressures on these blue chip stocks and also on the general market, because as just stated, the S&P 500 consists of a lot of Tesla. And we are just going to quickly go over this because I know that this is not 100% all talking about AMC, but in my opinion, this will have some sort of effect on the AMC share price, which I'm going to be talking about it today. So Cathie Wood's ARK Invest sold more than $100 million of Tesla stock on Wednesday, which is what the filings show. And so Cathie Wood has previously said that she likes to trade around stocks' volatility and take profits after shares have risen. Yet Tesla has also been struggling with global supply chain problems, according to its CEO, Elon Musk. And Cathie Wood of ARK Invest has sold more than $100 million of Tesla stock, despite giving the electric car company a 3,000 price target, 300% higher than Thursday's 755 closing price. And on Wednesday, ARK Invest sold a combined 142,708 Tesla shares. Again, that was 142,708 Tesla shares, worth around $109 million, its daily trade report showed. And ARK did not give a reason for the share sales, but Wood has previously said that she likes to trade around the volatility in Tesla stock. She told CNBC in 2020 that she likes to take some profit every now and then and buy the dips when stocks fall. Tesla rose sharply on Tuesday, jumping 2.6% from $733.57 to a closing price of $752.92, reportedly on the back of rising car sales in China. The shares were also changed in Friday's pre-market session at around $758.19, and Wood also decides to state that she is bullish on Tesla. Last week, she told Yahoo Finance that its shares are worth around $3,000. Our estimate for Tesla's success has gone up. The main reason for that is their market share. Instead of going down from year end of 2017 to today, it has actually gone up fairly dramatically. But you have to understand, Tesla has been caught up in the global supply chain problems that are hitting companies in the United States and Europe as economies rapidly reopen. And Tesla CEO Elon Musk tweeted last week that super crazy supply chain shortages were delaying its new Roadster model until 2023. Nonetheless, Tesla still remains ARK Innovation ETF's biggest holding on Thursday, making up 10.6% of the fund. It holds 3.7 million Tesla shares worth around $2.32 billion, ARK's data showed. ARK Invest did not immediately respond to a request for a comment on the Tesla sale. Now again, the reason why I'm talking about this is because of the Tesla sale right here. Yes, we do know that Cathie Wood, she is bullish on Tesla for the long term, but at this point, the long term is irrelevant. We want to know about all the near-term catalysts, because these near-term catalysts, they will have an indirect effect on the AMC share price. Because if Tesla stock is already down, let's just say right now, which it was on the day, Friday ended up going from $760 a share to $730 a share, around that price. And so if we already have that much of a drop right now, and we also have this news right over here, Cathie Wood selling around $100 million of Tesla stock, that just creates an even more bearish scenario, more negative sentiment in the near term, or in other words, temporary. Because I understand that this will not have a long-term effect, but AMC stock is not reliant on the long term, or at least not relevant to this news. But the significance really lies in the fact that this is a near-term catalyst for both AMC and Tesla and just the general market. Now let's quickly talk about GameStop and AMC as a hedge. We have a market cap of $20.812 billion for AMC Entertainment Holdings, and so the year-to-date price change for AMC has been around 1,826.4%. The significance of the market cap really lies in its ability to affect the share price, and this is direct. Rather than this being inverse, it is 100% direct, because the higher the market cap, the more the share price is going to increase. And so we've been talking about market cap a lot, because as AMC is at $51 a share right now, the market cap is already at $26 billion. And we know that from right over here. We have market cap $26 billion, and as I just stated, as long as the AMC share price continues to increase, the market cap will as well. Why is this relevant right now? Well, I'm already going to expect that AMC, as long as the market cap continues to increase, which I think it will, because I think that AMC is going to increase in share price over time. And so this is going to be a problem for the investors. This is going to be a problem for the hedge funds like Citadel, because anyone who is short selling AMC, in other words, they are selling AMC stock rather than buying the stock regularly, they do not want AMC to have a higher market cap, because that would indicate an increase in share price. And with the market cap increasing and the hedge funds losing, I would not be surprised to see AMC have some negative news in the future. This negative news may be about how AMC is not worth, let's say, $60 a share, and how the market cap is not justifiable, right? They're going to try to do whatever they can to invalidate AMC's price, because they know that they're selling positions on AMC, they're not doing the best right now. So by creating negative news, they think that they will scare the AMC stock community and the AMC movement, causing more people to sell their stock, and that way the AMC share price would actually decline. As long as there are no paper hands, as long as we understand the due diligence, which you guys could do by sharing this video with your fellow AMC investors so that we are all up to date surrounding the news for AMC, then there should be be no reason for there to be so many paper hands in the near future if more hedge funds, if more institutions, they start having selling reports on AMC saying that AMC is not worth $26 billion in market cap, or AMC is not worth $60 share price, etc., etc. I am still 100% bullish on AMC, and again, this is just my opinion. I'm not a financial advisor. If Investors Business Daily is ranking AMC second in the group, and we are comparing this to Netflix, I have no problems with this stock. We've been reiterating this point ever since AMC was trading below $10 a share, and this conviction still stays today. Now with that being said, AMC stock family, thanks again for watching. I'll see you guys next video.